Hello, I'm Scott Meyer, and today I'll be talking about preferred return.
So first of all, what is a preferred return? A preferred return is a minimum return that limited partners in a fund must receive before any carried interest or promote can be distributed to general partners. It's often expressed as an annual rate of return. In this case, with the model we're working with, we have 8%. And it can really be thought of as the minimum return that limited partners in a fund are expecting. Now, I specify a fund, but this kind of mechanism is also somewhat commonplace in joint venture deals and other one-off smaller deals. It's just extremely common in funds. I should also mention that these calculations and calculation methodologies can differ vastly depending on the limited partnership agreement or other legal documents governing a fund. So how you calculate preferred return for one fund could be completely different from how you calculate preferred return for another fund. Some of the more common differences that we see are compounding periods in the preferred return. So in the model that we're working with today, we have a toggle for that, but right now we just have it set to one compounding period, so really just annual compounding. Another common difference that we see is actual funding dates. So some funds, for example, when a capital contribution is made, they will start accruing preferred return when on the exact date that the capital contribution has been made. Some funds will push all capital contribution and distribution activity to either the first or last day of the month. So even if a capital contribution was made on, say, January 15th, you would only start accruing preferred return on January 31st. So now we'll go to the waterfall and show you how exactly this preferred return is calculated. So this top line we have right here is just the gross cash flows of the fund. So these two negative numbers, the negative $1 million and the negative $500,000, these would be capital contributions by the limited partners. These two distributions for a total of $2 million over here are the gross distributions that are going to run through the waterfall. So for this preferred return calculation, we have the unreturned capital balance, and then any previous preferred return that has been accrued and not repaid. We use this formula to calculate current period preferred return, and so for any one of these cash flows, if you summed up the current period preferred return and the unpaid preferred return, if there was a distribution in that period, that would be the preferred return balance that needs to be paid off. For this distribution, you can see that we have $1 million, which is more than enough to pay this preferred return of $96,000. So the excess cash flow will then flow down to the return of capital tier. The return of capital isn't quite enough to return, or the $903,000 is not quite enough to return all of the capital. So for this next distribution, you can see that this unreturned capital balance of $596,000 that is not covered by this distribution right here still accrues preferred return on this period between 11/30 and 12/31. Once that $3,909 has been paid off, the excess cash flow will flow down to the return of capital, where all of the capital is returned. One of the unique features of this calculation style is that we should be able to run an XIRR check on the preferred return and the return of capital and have it equal exactly the preferred return rate. So you can see here in cell E30, we've done that. You can see that we get to exactly 8%, which matches the preferred return rate. If we were to change the compounding to, say, monthly compounding, you'll see that this matches the 8.3% that we have here as the effective return rate. Preferred returns are important because they are really the threshold between limited partners receiving 100% of the money and general partners starting to receive carried interest distributions.
That's all for today. If you like this model, please check out our website at tsmfinancialmodels.com.